Hi everyone. Welcome to the fifth month update of the $5,000 small account challenge. This is the June 2026 monthly statement report. So I will say that this month has been really good for the portfolio. We had almost a 25% gain versus the prior month, and overall we are up about 45% year to date. So here is what happened in June 2026. We start off with paying the monthly data fee, which with Optimus Futures is $9. For those who are not aware, when I started this challenge, I originally used AMP Futures, which I used for my main trading account. And AMP Futures charges $40 a month in terms of overall fees. And that's a lot. $40 uh, basically being eaten out of your account is a little bit much for a $5,000 small account challenge. And so I end up having to switch to Optimus Futures, which has a cheaper fee of $9. So you see that at the top. Then the middle section is the trading activity breakdown. This is per side, so it's probably easier to just look at the offset activity at the bottom, which shows you the round trip. So starting off the month, we had a very strong strategy. As you can tell, I only size up to 2 lots for my strongest strategies. That one took a pretty strong winner, almost $1,300. And then 2 weaker strategies fired throughout the month. First trade was break even. Second trade was almost a $300 loss. And then going into the end of the month, we have the July 4th rally. This is the rally in the week leading up to Independence Day. So all the strategies in this portfolio are intraday only. So that means that the trade was entered on June 30th and then, of course, exited July 1st. And then that was taken at 2 lots because this is one of the stronger seasonalities out there, probably as strong as the Santa Claus rally and the rally before Christmas that is pretty consistent. And for my entire portfolio, which I'll talk about a little bit in the last slide, I use Build Alpha's portfolio optimizer. It plots the estimated return versus estimated volatility. And there I can compute the Sharpe ratio, which is my preferred risk-adjusted return metric. I know some people prefer other ones, but from that graph, usually you'll find that the ideal Sharpe ratio does not size every single strategy in the portfolio with the same position sizing. Your highest Sharpe ratio will usually come from the highest return and the lowest volatility, at least from an estimate. And so when you're able to compute that, you'll often get a result that says, okay, certain strategies are stronger than others. You should take those at higher lots. And then certain strategies still have an edge, but are weaker, and they will increase the overall volatility of the account. And so you should probably size them down to reduce your risk of ruin. And that's how you arrive at unequal position sizing, but a higher Sharpe ratio and lower drawdowns. And that is also why you see that I have 2 trades that were taken at 2 lots, and of course they were both winners. And of course the ones that are taken at 1 lot were either break even or losing. So again, portfolio construction is really key, especially with a $5,000 small account challenge. 2 lots is pushing the point where I have almost no margin left and could be forced liquidated by the broker if one of these higher efficiency strategies was to go into too much of a drawdown. But thankfully, this account now is almost at 50% year to date. So it's actually sitting at about 7,000, a little bit over 7,000. So we started the month at $5,737.46. That aligns with the end of month video I made for last month, the 4th month update. And of course, we gained a little bit over 1,500, and then subtracting fees. And then now we're sitting around 7,000, a little bit over 7,200. So that gives me a little bit more buffer room for those efficient strategies that are taking 2 lots. But it also allows me to expand the portfolio a bit. So some people have been asking me about what strategies are you actually running? Well, obviously I'm not going to give away just, the strategies I'm running live. Although what's funny is I actually have already given away a good number of them. So most of the MAS portfolio is just converted versions of the SPY strategies from the beginner course in the algo trading series. I've gotten plenty of comments on that one where like, oh, these strategies couldn't truly exist or they're not real or whatever. But What is funny is that even if I give away some of my best strategies for free, I think there are plenty of people on the internet who think that it's just not possible, it's not real, it must be a hoax, whatever. And so they just don't want to be profitable, even if you just handed them strategies on a golden platter and said, look, this will make you profitable. But anyway, enough of my rant. The idea here is that I want to expand the gold portfolio. So I talked earlier about the margin requirements, and basically what I had to do with the three MGC strategies is make sure that they had the lowest risk or lowest correlation, I should say, with the MES strategies. Because if we were ever to be in a situation where we're close to about a $5,000 account balance, and then we had two MES lots on, and then one MGC lot on, and then all of our strategies just went straight into drawdown, it's very possible that the broker would have forced liquidated us for losses because the account no longer has enough margin to trade both MES and MGC and pull through those drawdowns. So my plan to expand to 5 gold strategies, I'm going to have to do some portfolio optimization because even though we have a little bit more buffer room now, we still have to be cognizant of how much drawdown can we actually sustain. If we had 2 MES lots and then 1 MGC trade on, how much drawdown can we take before the margin requirements basically force us to realize the loss and get called by the broker? I'm going to have to pick 2 strategies, do some portfolio simulation, figure out which 2 strategies actually make the most sense to add to this small account challenge. But I do think that as long as we're above 7,000, we can expand the gold section of the portfolio. I just haven't done that yet because obviously I couldn't have known the end of June results before the end of June. So I didn't pre-pick any strategies in advance. I will be spending some time to trying to figure out what gold strategies to add to bring it to 5. And it's possible that, we don't actually run the 5 gold strategies until August. I may actually stick with the 3 for the rest of July as I try to figure out what 2 new strategies to add. I also have a weird issue going on with my Quant VPS. So Quant VPS is just a service that sits next to Rhythmic, or it's like co-located with CME, the exchange. And I rent a VPS there since it gets me some of the best fills. Recently, my Quant VPS has been crashing because of what the logs suggest is a Quantower memory issue. So I've reported this to Quantower, and we'll see if this is able to get fixed relatively soon. Quant VPS was nice enough to go ahead and re-provision me a new machine. But again, the root issue I don't think is actually from Quant VPS. I think it's from Quantower having some sort of memory issue. I don't know fully exactly. I've just reported the bug, but I'm hoping I'm not going to have to switch trading platforms or do something to fix the memory issue, like restart every day or something. But we'll see what happens. This is just the reality of trading is, weird stuff like this happens. So anyway, I don't want to ramble too much. This has been a good month for the portfolio. I'm very curious to see where it is by the end of the year. Thank you for watching, and please stay tuned.